Hi there, this is chapter 7. It's going to be a very quick session because I already touched on chapter 7 from chapter 6. Okay, so what am I talking about in chapter 7? I'm a bit uncomfortable and I need to sleep. Chapter 7, I'm talking about when not to trade. Okay, it says there are two main characteristics of bad timing. It's actually three, right? Low activity in the market, which is I spoke about that when the market just fluctuating sideways, when the market is just chalking direction of a trade, meaning that this is when the market just has spikes. I'll show you everything that I'm talking about within the course of the actual charts. Also, when you're not emotionally okay. If you're not okay, stay away from the charts. If you're not okay, you stay away from the charts. Okay, close your laptop, put your phone away, and just take some time off. In most cases, this happens after you have a bad trade. If it happens that you take a trade, you happen to lose 5,000 Rand and shit, you just feel like crap, just walk away. Sometimes you can even walk away from the charts maybe for like a couple of days or even a week and not trade. It happens to me, it happens to everyone who literally who's into trading for real. You know, you can't have a bad trade and then after you lose that money, you want to make back the loss that you just made now. You need to learn to walk away from the charts, get a breather, and then come back when your mind is sober, right? Also, you do not want to trade on the Friday afternoon. Why? Because Friday afternoon the market tends to lose momentum. Imagine, look at yourself. If you're at work and it's a Friday, when you go into work in the morning, your energy, you feel good, you're excited. But you go to lunch, come after lunch, your mind is not at work. You're already making phone calls, calling your friends, talking about beer, whatever the case might be. So Friday afternoon, you don't want to trade. If there is an opportunity though to trade, fuck it, take it. But it's not the best timing to be looking for opportunities to trade. Okay, when there is important news events, well, it's not the best thing to do if you're how can I put this? Because trading news is actually an advantage because the market is very volatile. But the sad part is, or the fucked up part is when the market just spikes. Basically, the market can shoot up and then it quickly makes a turn within 5 seconds, go down. Right. So when there's news, basically what happens is basically what I've written here says traders should avoid trading when major economic numbers are released, such as central bank announces monthly employment report, as these events can make markets in unpredictable directions and create risks if the news differ from the previous direction. Right? You can trade because the market gets to be volatile, but the market can go opposite direction. But this is something that you will want to experience yourself. Preferably, yes, you'll definitely experience this because we're gonna have to practice it on a demo account first, so that you can see what happens when there's news events. Cool. Also, I say when angry or frustrated, you don't want to be trading the news, and then also overnight. It says here many forex brokers charge fees for living for leaving the position overnight. That is called the swap. Depending on how big the lot size that you're using, the bigger the lot size, the more swap you will be charged. But you can leave a trade running overnight. It's okay. But what you should avoid to do is leaving a trade running over the weekend because the price can change. Remember that the market closes on Friday, right? And what can happen is when the market closes on Friday, what can happen is that if the price closed, if you maybe you're looking at USD ZAR, and the price closed at 13 Rand 50, and then something happens over the weekend. Maybe our president just fucks up, as they always do, and then that fuck up affects the market. Let's say now the dollar against the rand is no longer 14 rand 50. Maybe it says let's say it's 15 rand. That fluctuation or that move from that price to 15 rand will not be on the charts. When the market opens midnight Monday or Sunday, it will just open, it will leave a gap, and then it will open at 15 rand. So imagine now you had a trade that was running, you forgot to close it or you did not close it, and then all of a sudden the market opens on this gap. Maybe you might have made a fucking loss. So it's not the best thing to leave your trades running over the weekends. You can leave them running overnight, but you'll be charged a swap, which is it's not really a big amount. It's not. But the fucked up part is when you're leaving it running over the weekend. That's not the nice thing. That's not the wisest thing to do. It's a definite no-no actually. Also, the banks are closing. They close their position over the weekends due to such things, such events whereby price changes overnight. I mean, over the weekend, and that price change over the weekend does not get reflected on the actual charts. And remember, you can't even close your trades over though. Or you can't close your trades